32,000 Bitcoin. That's how many coins public miners dumped onto the market in the first 3 months of this year, more than they sold in all of 2025 combined. And here's the part nobody's talking about. Bitcoin is up 14% this month. The price didn't crash. It ripped higher, above $78,000. So ask yourself the obvious question. Who's buying? Because somebody absorbed that supply, somebody with very deep pockets. And once you see who it is, you'll understand why this rally looks different from every other bounce we've had this year. I'm going to walk you through what I think is the single most important Bitcoin story of the week. It's not the Iran ceasefire. It's not Michael Saylor's $2.5 billion buy, though we'll get to both of those. It's a specific indicator that just flashed its strongest bullish signal since Bitcoin was trading at its all-time high near 126,000 last October. If you hold Bitcoin, this one matters. Let's get into it. The indicator is called the COINBASE Premium. Sounds technical, but it's actually simple. COINBASE is the main exchange where US institutions buy Bitcoin. Big funds, pension plans, corporate treasuries. When they're buying aggressively, the price of Bitcoin on COINBASE ticks slightly higher than the price on global exchanges. That difference is the premium. When the premium is positive for days in a row, it means US institutional money is leaning in hard. That's exactly what's happening right now. As of today, April 22nd, the COINBASE premium has been positive for 14 straight days. 14. The last time we saw a streak this long was October of last year, when Bitcoin was printing fresh all-time highs above 126,000. So think about that for a second. The last time American institutions were this aggressive, Bitcoin was at record highs. Now they're doing it again, but at a price roughly 38% below that peak. They're not chasing, they're accumulating. And they're not the only ones. Strategy, the company formerly known as MicroStrategy, just disclosed its largest Bitcoin purchase in 17 months. They bought 34,164 Bitcoin last week for $2.54 billion, average price of $74,395 per coin. That brings their total stack to 815,000 Bitcoin. And here's the milestone that nobody's covering properly. Strategy's holdings just surpassed BlackRock's BYBIT spot Bitcoin ETF for the first time since the second quarter of 2024. One company now owns more Bitcoin than the largest Bitcoin ETF on the planet. That's a historic flip. Then you've got the ETFs themselves. Spot Bitcoin ETFs just posted 5 consecutive days of net inflows. $238 million came in on April 20th alone. Roughly $996 million for the previous week. So add it up. Strategy buying billions. ETFs pulling in nearly $1 billion a week. COINBASE Premium telling us US institutions are front-running the order book. That's the demand side. Now let's talk about the supply side. Because this is where it gets interesting. Remember those 32,000 Bitcoin that miners sold in the first quarter? That's a record. More than miners dumped after the Terra Luna collapse in 2022. More than the entire FTX aftermath. Companies like Riot Platforms and Mara Holdings have been offloading Bitcoin to pay down debt and pivot toward artificial intelligence data centers. Riot sold 3,778 Bitcoin in Q1. That's more than 2.5 times what they mined. Mara sold over $1 billion worth. And Bitcoin's mining difficulty just dropped 2.43%, which tells you miner economics are still compressed. In any previous cycle, that kind of sell pressure from miners would have crushed the price. It didn't. The buyers ate it. All of it. And the price went up. That is the real story. Supply from weak hands is being absorbed by the strongest hands in the market. Corporate treasuries, spot ETFs, US institutions. This is a changing of the guard happening in real time. Now I need to give you the other side, because I'm not here to pump you. There are still bearish signals flashing. Funding rates on Bitcoin perpetual futures have been negative for 46 straight days. That's the longest stretch since the FTX collapse in late 2022. Negative funding means traders are paying a fee to hold short positions. A lot of people are still betting Bitcoin goes down. Cointelegraph pointed out today that Bitcoin is on track for its 6th consecutive monthly loss. That would be the worst stretch since the 2018 bear market. So the sentiment out there is still fragile. Retail is still scared. But here's the thing. That bearish positioning is actually fuel. If Bitcoin holds above 78,000, all those short sellers have to cover. They buy to close their positions. And that buying pressure stacks on top of the institutional buying we already talked about. That's what traders call a short squeeze. Research firm Kaiko said a clean break above 76,000 opens a technical path toward 85,000. We're already through that level. The macro piece is Iran. Every major Bitcoin move this year has tracked Middle East tensions more than any crypto-native news. President Trump extended the Iran ceasefire on Sunday. That was the match that lit this rally. If the ceasefire holds, risk assets rip. If it breaks, oil spikes and Bitcoin pulls back towards 65,000. So this is still a geopolitical tape. Don't pretend otherwise. Here's how I'd summarize what's happening. The noisy surface story is Iran. The quiet structural story is that Bitcoin's ownership is consolidating. It's moving from miners to corporations, from retail to ETFs, from weak hands to conviction holders. And this is happening at depressed prices, not at the top. That's the bullish setup in one sentence. Zoom out for a second. We are 24 months past the last Bitcoin halving. In April 2024, the block reward got cut from 6.25 Bitcoin to 3.125 Bitcoin per block. That means the flow of new Bitcoin onto the market is half what it used to be. Meanwhile, demand from ETFs, corporations, and nation-states keeps growing. That's the simplest scarcity story in finance. But the bigger shift is the ETF era. In every previous bear market, 50% drawdowns brought capitulation, panic, forced selling from hedge funds and leveraged players. This drawdown is different. ETF inflows have continued through the entire pullback. Corporations have accumulated. The infrastructure that's supposed to absorb selling pressure is actually doing its job. That's brand new. We've never seen it before. And watch what's coming. The Clarity Act, which is the U.S. market structure bill for crypto, is still stuck in the Senate. When it passes, it unlocks a wave of institutional capital that can't legally touch Bitcoin today. The Basel III rewrite will quietly decide how banks can hold Bitcoin on their balance sheets. That's trillions of dollars of potential demand. None of this is priced in. So when you look at today's move, don't just see a price chart. See the structural transition. Miners are exiting, corporations are entering. Institutions are front-running the order book. The bear market is doing exactly what a bear market is supposed to do. It's transferring Bitcoin from people who shouldn't own it to people who will never sell it. That is bullish. Quietly, mechanically bullish. If this kind of breakdown is useful to you, do me a favor and hit that subscribe button. I cover the Bitcoin story every single day. No altcoin noise, no trading hype, just what actually matters for long-term holders. And if you want to go deeper, head over to bitcoinmaxing.com. It's where I post daily Bitcoin resources. You'll also find a free Bitcoin retirement calculator there. Plug in your numbers, see what your stack could be worth decades from now at different adoption curves. It takes 2 minutes, and it might completely change how you think about stacking sats. Link is in the description. I'll see you tomorrow. Start with price. Bitcoin is at $75,700, up about 1.5% over 24 hours. That sounds boring. It's not. That $75,000 level is what traders are calling the make or break line. Above it, the bulls have control. Below it, we're back in the red zone that took us to $63,000 in February. Now here's what's really going on under the hood. The funding rate on Bitcoin perpetual futures has been negative for 46 straight days. If you're new, here's what that means. Funding is a fee that traders pay each other every 8 hours on futures. When it goes negative, shorts are paying longs. Translation? Traders are paying a premium to bet on a crash. And 46 days is the longest streak we've seen since the FTX collapse in late 2022. You know what happened after FTX? Bitcoin bottomed, then did a 5x over the next 2 years. That is the exact pattern we are staring at right now. Now zoom out to flows. Spot Bitcoin ETFs took in $996 million in net inflows last week, almost a full $1 billion. Strongest week since mid-January. Meanwhile, the biggest Bitcoin wallets on chain have added 270,000 BTC in the last 30 days alone. Biggest monthly spree since 2013, back when Bitcoin was trading in the hundreds. And exchange reserves have dropped to a 7-year low. Think about what that tells you. Retail is selling on exchanges. Whales are pulling coins off exchanges into cold storage. ETFs are absorbing new supply at multiples of what miners produce every day. That is not a market breaking down. That is a market being quietly redistributed, from weak hands to strong hands. And then there's strategy. Michael Saylor's company. Last week, they bought 34,164 Bitcoin for $2.54 billion. Average price, $74,395 a coin. They funded it with their perpetual preferred stock and common stock issuance. And here's the real headline. Strategy now holds more Bitcoin than BlackRock's IBIT ETF. One publicly traded company has a bigger BTC position than the world's largest asset manager's flagship Bitcoin product. Let that sink in. Okay, so why is price stuck? 2 words. Iran ceasefire. The ceasefire expires tomorrow evening Washington time. Trump said on Monday he's not likely to extend it without a deal. Iran just confirmed they're sending a team to Pakistan for a second round of talks. But as of this morning, that delegation has not actually left. This is the 4th major Iran escalation since the conflict started on February 28th, and the pattern has been brutal. Bitcoin drops on escalation, rips higher on de-escalation. But net, we've gone nowhere. Stuck in a range between $63,000 and $78,000 for 2 months. The Strait of Hormuz has been closed, opened, and closed again just in the last week. When Iran opened it on Friday, oil crashed nearly 13% in a single day, and Bitcoin ripped to $78,336, highest level since early February. Then Iran closed it again on Saturday. U.S. Navy seized an Iranian tanker on Sunday, and Bitcoin gave back most of the move. So the math is simple. If the ceasefire extends, or we even get a credible extension signal, Bitcoin rips. All those crowded shorts get liquidated. $80,000 becomes realistic by month end. If the ceasefire collapses and oil goes back above $100, Bitcoin probably retests the mid-60s. And then there's the other catalyst today, Kevin Warsh. Senate confirmation hearing for Fed chair. Warsh is a known inflation hawk. He opposed quantitative easing after 2008, but the market is going to be listening very carefully. If his tone is even slightly dovish, if he hints at rate cuts, risk assets catch a bid. If he doubles down on hawkish policy, it's another headwind. QCP Capital flagged that his remarks could move markets if they signal policy easing. One more thing worth flagging. Bitcoin's 30-day realized volatility is 42%. That's actually lower than South Korea's Kospi stock index right now. Bitcoin, less volatile than Korean stocks. That alone tells you how much this asset has matured. Now let's zoom out, because the real story isn't today's price action. We're 40% below the all-time high of $126,000 that we hit back in October. And yet, every piece of the structural Bitcoin thesis is stronger than it was at the top. Exchange reserves at multi-year lows. ETFs absorbing coins faster than miners can produce them. Corporate treasuries like Strategy are now systemically important buyers. Whales accumulating at a pace we haven't seen in over a decade. And there's something even deeper happening. Matt Hogan over at Bitwise has been writing about this. He argues Bitcoin is now being priced as 2 things at once. It's still digital gold, but it's also becoming a live bet on a neutral settlement layer for global value transfer. Here's the evidence. Iran is literally accepting Bitcoin as payment from cargo ships transiting the Strait of Hormuz. $1 per barrel of oil. That's not theory. That's Bitcoin being used as neutral rails when traditional payment systems break down under sanctions. Since the Iran war started in late February, Bitcoin is actually up about 12%. The S&P is slightly down. Gold has sold off. That is a clean break from the old high beta correlation with tech stocks. The long-term targets tell the story. Bernstein has a $150,000 year-end target. Standard Chartered has called for $200,000. The bear case takes us to $50,000 if everything unravels. Wide band. But the structural demand side is what makes the upside plausible. Here's my take. We are in a consolidation that has cleared out leverage, rebuilt conviction, and transferred coins from speculators to long-term holders. The question isn't whether Bitcoin breaks out, it's when. If this breakdown helped you, smash the subscribe button. I cover Bitcoin and Bitcoin only. No altcoin noise, no hype, just signal, every single day. And head over to bitcoinmaxing.com. That is where you'll find my free Bitcoin retirement calculator. Plug in your stack, see where you land. Plus daily Bitcoin research and tools to help you stack smarter. The next 48 hours are going to tell us a lot. I'll be watching closely. See you in the next one.